The fundamentals of the U.S. economy remain strong. However, the coronavirus poses evolving risks.
Well, look, if the Federal Reserve was also able to make people go out, that would be something that matters. This is what does this. It moves the stock market, so maybe people feel better. There's a bit of a wealth effect, but this is a biological crisis. It's terrific that Jay's on board. He can do everything he can, but in the end, why go out?
I guess they're trying to preempt, so more market pain, which you say. They can do that. At least they're doing it right now. We'll see if it lasts. And two, if this really is a demand shock, like if consumers stay home, if housing activity completely stops, we don't know where it's going. But if that is the problem, that is something the Fed responds to with lower rates.
But we know mortgage rates are actually still above where they were when the 10-year was at 2. OK, we also know that the problem is if you got something that allowed you to get out of the hospital, we had a vaccine, anything, then you won't need this rate cut. But the more important thing is that we need people to be able to stay at work. There's a lot of people who can work at home, but there's another group of people, if they work at home, it's deadly. I want to see what the claims are.
Yeah. Steve, you're still with us. What about the critics who are certain, I would assume, to say, well, this cuts their ability to really respond if the economy tanks and we have a recession? And those who also say, given the president's relentless badgering of the Fed, that they are knuckling under to his desires?
I'll take the latter one. The Fed is not going to respond to that, as you know, David. They've been trying to put blinders on and do their job as they think they ought to do it. I think they wish that the president wouldn't do what it's doing. I think that this act comes irrespective of the president's wishes here. On the first question, I understand that point of view. I think it's a legitimate point of view. I will offer you the other side, David, which is that the research done since the financial crisis suggests that as you get closer to zero, when and if you have bullets to shoot, you ought to do it earlier and more forcefully. If there is going to be some downturn related to the coronavirus in the economy that has the potential to last, not just a temporary downturn, then the Fed ought to address it earlier and more forcefully. That's what the research says. And David, I don't know how to counter the other side of the argument, which is perfectly legitimate, that you ought to hold on to it. I think at some point you make a judgment call that what's happening now, what's happened in China, the supply shortage that's going to develop or that's already developing, the possibility that you have consumers not going out and spending and reducing their spending levels is one that the Federal Reserve thinks represents a serious threat to the U.S. economy.
Right.
Hey, Steve, there's a Fed meeting coming up. And I think, a lot of the guests on CNBC expected this move to happen then. So what are we, 2 weeks away? So I think that's the surprising element, that it happened outside of a meeting. What is he going to do at the meeting?
Well, if things get worse than expected, you might imagine adding another quarter point. I have been showing those probability charts that showed there was something like, I want to call it a 60% probability of a 50 basis point rate cut. By the way, it's not actually for the meeting. It's for the end of the contract at the end of the month of March. So it can happen any time. It doesn't really pinpoint when it happens. And some 30 or 40% probability of a 25 basis point rate cut. And I suppose what's just happened now, Sarah, is the debate in the market has become one of 0 or 25 at the March meeting. There's also been times throughout these last, especially call them 10 days of tumult in the markets, that the market has priced in a full percentage point rate cut as soon as July, that whole 100 basis points, or later on into the fall. So that's another part of the debate, is how much more the Federal Reserve is going to do. I think it's also probably not crazy to start talking about whether or not additional quantitative easing is out there. We have also talked in the last couple of days about some speculation, J.P. Morgan among them, that rates could eventually go to zero as a result of this crisis. I think the numbers to watch, and I'm kind of echoing Jim Cramer, I believe, on this, are not necessarily the economic numbers, though we will watch those. I think they're the infection numbers. I think those are the ones that are going to determine, and also critically, the infection numbers will determine the actions that are taken by businesses, by schools, by governments, as to how much of a shutdown there is to the economy.
Totally. I mean, look at the stocks that are really going up. It's the recession stocks. People are saying, you know what, I'm making a determination. The Fed's really worried, then I should be worried. So let's go buy the soft goods. Let's go buy consumer packaged goods. Let's go buy the things that people hoard. They're not going and starting to take Caterpillar. I mean, Caterpillar's up a little bit because it's in the Dow, but this isn't necessarily going to produce anything other than I think, some degree of fear because we need to see the infection numbers, the biological. That's the biological contract. That's what we need to worry about.